Most Americans think their credit score only matters when they are applying for a loan. But what if I told you your credit score quietly affects where you live, how much you pay, which jobs you can get, and even how expensive your life becomes? And the craziest part? Most people don't realize how much control it actually has until it's already working against them. Welcome to the A-Angle channel. Today, let's break down how credit scores secretly control your life in America. On paper, a credit score is just a 3-digit number, usually between 300 and 850. It's supposed to measure one thing: how risky you are as a borrower. But in the US, that number became something much bigger. It turned into a trust score, a shortcut that banks, landlords, insurers, and even employers use to decide how much they should trust you without ever knowing you. And once that score exists, it follows you almost everywhere. Let's start with housing. If you rent in the US, there's a good chance your landlord checks your credit score. A lower score doesn't just mean higher rent. It can mean your application gets rejected. You need a cosigner, or you're asked for a larger security deposit. 2. People with the same income can end up living in completely different neighborhoods just because of this number. And if you want to buy a home, your credit score determines whether you get approved, your interest rate, and how much extra you will pay over 30 years. A difference of just 100 points can cost you tens or even hundreds of thousands of dollars over the life of a mortgage. Buying a car? Your credit score decides if you get approved, your monthly payment, how much interest you'll pay. But it doesn't stop there. In many states, insurance companies use credit scores to set auto insurance rates. That means even if you've never had an accident, a lower score can make your insurance more expensive. So you pay more not because you're a bad driver, but because a financial algorithm says you're risky. This part surprises a lot of people. Some employers in the US check credit reports during hiring, especially for finance jobs, management roles, and positions involving money or security. They're not always looking for debt, they're looking for patterns. Late payments, accounts and collections, financial stress. Even if your credit issues had nothing to do with your skills, they can still influence whether you get hired. Here's where the system becomes quietly brutal. A lower credit score often means higher interest rates, higher deposits, higher monthly bills, which means life becomes more expensive for the people who can afford it the least. It creates a loop. The more you struggle, the more your score drops. Your score drops, life gets more expensive. Your life gets more expensive, you struggle more. And escaping that loop is harder than most people realize. So why does the US rely so heavily on credit scores? Because they're fast, cheap, and profitable. Instead of understanding people, companies rely on a number. It reduces risk for businesses but shifts pressure onto individuals. And once the system was built, it spread far beyond lending. Here's the truth most Americans aren't told. Credit scores don't measure responsibility. They measure how well you play the credit game. Pay rent on time for years, pay utilities every month, be financially careful, and still have a weak score if you don't use credit the right way. Meanwhile, someone with more debt but better credit behavior can score higher. The system rewards activity, not stability. Your credit score isn't just a number. It's a quiet gatekeeper that shapes opportunities long before you realize it. Understanding how it works doesn't fix everything, but it gives you awareness. And awareness is the first step to taking back control in a system designed to operate in the background. If you found this helpful, do like and subscribe this channel.